After the stock markets closed on Wednesday, April 2nd, 2025, President Donald Trump delivered massive news for stock market investors, businesses, and consumers worldwide. The president announced reciprocal tariffs on dozens of countries, increasing the rate the United States charges for imported products and changing the trading landscape around the world. In this video, I'll go into the details of what was announced, and this is likely going to take several videos to completely digest all of the impacts as a result of these announcements. And this will be the first in probably a series of videos that I'll do in trying to connect the dots here in how these tariffs will impact you and your portfolio of stocks, and which stocks specifically will be impacted directly, which stocks will be impacted indirectly. I don't think there's going to be any stock that's completely immune to these announcements. I think whether directly or indirectly, nearly every business is going to be impacted from these tariffs. That's how broad they are, that's how wide reaching they are. I think it's going to impact many, many businesses. So let's get started digesting these results. So here I've pulled up a full list of countries that were hit with reciprocal tariffs, and I'm not going to go through each individual country and the tariff rate charged to that country. I'm just going to touch on maybe 3 or 4 of the largest countries and the impacts and the specific businesses that are going to be hit hardest from that specific country tariff. And then I'll go through and look at the market reaction to these initial results. Already, stock markets worldwide are down several percentage points following these announcements. The biggest announcement, in my opinion, is the rate charged to China. The United States claims that tariffs charged by China to the USA are 67%. These include intangible tariffs, things like blocked access to the markets. I don't think YouTube is allowed to even be in China. Those types of things the administration accounted for when they were looking at unfair trading practices by countries and how they treat US businesses. And so the US added an additional 34% tariff to products imported from China. That is, to my understanding, on top of the already 20% tariff that the United States added this year. So that's going to be a 54% tariff in sum for products imported from China. Now, one of the biggest businesses that's going to be impacted as a result of this is Apple, which has significant assembly and manufacturing practices in China. You're seeing the result of that. Apple stock price is down roughly 8% as I started this recording. That's going to increase Apple's cost, the cost of goods sold, and then Apple has to make a decision. Are they going to absorb that cost fully and leave their prices for their products the same? Or are they going to pass those costs along to consumers? So the last I checked, iPhones cost about $300 to $400 to create. And if the cost goes up by 50% because of imports, that means the cost to make each iPhone will go up by an estimated, this is like back of the envelope math here, $200 each iPhone. So now Apple has a choice. Do they increase the price of every iPhone in the markets by $200? Or do they increase the price by a lower amount? Or do they just leave the price the same? That's a choice. That's a business decision that Apple needs to make that's going to have large consequences. The next biggest region is the European Union, which is a collection of countries. And the United States claims that the European Union charges the US 39% tariffs, again, all inclusive, tangible and intangible. And they're going to charge 20% to products imported from the European Union. Now, there aren't any companies that I follow, and I follow over 100, 125 companies. that I see that's going to have a major negative impact as a result of this tariff. But that doesn't mean that this is a insignificant tariff. It's a huge tariff. It's going to impact many businesses, and it's going to increase the cost of goods sold for these businesses, and they're going to have a similar choice. Although this one is not as extreme. This one, they have the opportunity to tell the suppliers, hey, it's a 20% tariff. Why don't you take the 10% hit? We'll take the other 10% hit, and we'll charge consumers maybe 5% more or 10% more. And in that way, it can be absorbed without too much impact to the end consumer demand, which is not going to be the case for products imported from China. That tariff is too large for there to be a absorption of those tariffs between the supplier and the buyer. Maybe they can absorb some of those tariffs, but the 54% number is so large that the businesses do not have that much margin to absorb those costs. They'll simply be an unprofitable business if they absorbed all of those costs. And I'm talking most business, not every business, right? Apple's profit margins are, operating profit margins are approaching 40%. So they have greater room to absorb some of these tariffs, which brings me to another important point. This is where it becomes important, and this is where it comes to the surface when you're investing in strong companies versus weak companies. A lot of those speculative names that people were investing in, these unprofitable growth stocks that had a lot of hope and enthusiasm built into the valuation, these businesses are going to be hit the hardest. And I wouldn't be surprised if these tariffs remain in place for 6 months, 12 months, 18 months, if there are many businesses that have to shut down, that simply cannot survive based on these new economics. Because many businesses were relying on these lower cost of goods, and they were still barely breaking even. Some of them are still losing money. And now imagine with all of these higher costs, they're not going to be around much longer. So, with the bigger companies like Apple, they are going to face these higher costs to be sure, but these businesses are so strong that they can absorb these higher costs, pass along some of the prices to customers, and survive, even if it means they will survive with lower profit margins or they will survive with a couple of quarters of lower revenue. They will survive. But the smaller businesses, the ones with weaker balance sheets and lower and negative profit margins, they might just have to shut down because the unit economics are so disrupted by these tariffs that are, again, broad worldwide. And so it's hard for a business to avoid these and say, we'll take our production from China and go to Vietnam or Japan, right? You see Taiwan with a 32% tariff, Japan 24%, India 26%. So even if you were to move production from China to India, you're still facing a meaningful tariff. Now, can you move production from China to the United States? Yes, you can do that. It will be difficult, and it will be almost maybe the same as paying the tariffs because the cost of production in the United States is so much higher than the cost of production in many of these other countries. So, regardless, businesses will face higher costs and they will make a decision. Most likely, they will pass along some of those higher costs to customers. So, you're going to see higher prices for almost everything that you're going to buy, not immediately, but maybe in 3 months, maybe in 6 months, you're going to start to see higher prices. And of course, if you remember from your basic economics class, higher prices means lower demand. So people are going to buy fewer things as a result of higher prices. And so that brings up the risks of a recession because of these tariffs, which is now a higher probability. I came into this year uh, forecasting a probability of recession that was very low by historical standards. I was thinking maybe a 10 or 15% chance of recession this year. As a result of these tariffs, the probability of recession now, in my opinion, is up to at least 25%, maybe 33% chance of recession as a result of these tariffs. Again, depending on how long they remain in place, if they're negotiated away, if there's exemptions. Also, in retaliation, what are these other countries going to do to retaliate against these tariffs? They are clearly not going to be happy about this. So that's going to make a big difference in how the US economy responds to these tariffs. The stock market was down a lot more. It's the Nasdaq is down 3.7%, the S&P 500 is down 3.4%. I would have expected to see bigger declines as a result of this news. I felt that a 5% decline in the Nasdaq was more appropriate, and a 4, maybe 4.5% decline in the S&P 500 would be more appropriate in response to this news, because it is going to be a negative impact on businesses' earnings and revenue, and a lot more question marks, which is going to make it more difficult to manage. The degree of difficulty is rising. So it's going to be negative for businesses. Now, there's also going to be buying opportunities here, and that's what I'm going to be doing a lot of research on, in figuring these buying opportunities as a result of these tariffs. And I'm going to share those with you over the next coming days and weeks, all of the opportunities that will be rising as a result of this uncertainty and disruption to worldwide economies. I'm excited to announce a brand new private Discord to our channel members at the VIP Discord tier. It's a great place to directly connect with me, ask questions, and engage with a community of like-minded investors. Spots are limited, so join us today.